Alright, so supply and demand. I wanted to remake this video because I want y'all to really understand this in a more clearer way. Okay, so what is supply? Supply is aggressive selling. So we're only looking for aggressive selling, okay? But only look for aggressive selling if it's in a downtrend. You may see aggressive selling in the uptrend and you may lose. So you have to know the trend, okay? Aggressive buying is demand, where we see a bunch of bullish candles coming back consistently, okay? So I'm going to walk through some setups and explain to you basically how to spot them, because supply and demand is very simple, but you have to know the trend, okay? Because if you say if it's in a downtrend and it's pushing up, it's pushing down really hard, but then it have like an aggressive pullback. That pullback might look like demand, but you have to know the overall trend, okay? So let's get into it. So right here, this move right here, where did this move start from? Over here, it started right here, okay? So this is where the investors bought, starting down here, because this big blue candle started that entire break of structure, okay? So as it came back to that area, this is where they had to come back to fill in, to let some more investors get back in. So as they let some more people back in, they want to continue that move, okay? So this is demand right here, because the move started right here. They start buying exactly right here, and it came right back to that area to buy. Now, how exactly do I draw my demand? I draw it by a zone. I like drawing it in zones, so I don't just do it like by a candle. I want to do the whole area, because sometimes it might not come back to this last bearish candle. So I give it some room. Don't make it too big, because that's not gonna be realistic. Like it could just, it have to be close to where they start buying from. Okay, I'm gonna say that. So let's just keep going. Okay, right here, look at all these consecutive blue candles. Let me zoom in. Look at all these consecutive blue candles. It kept buying, and then what did they do? They came right back to that area. They came right back to that area and then bought again. Now you see right here where it broke the candle high and then came back down. You want to give your trade some breathing room. So if you want to have a safer stop loss, make sure your stop loss is underneath the zone. But if you want that tighter stop loss, which could be a little bit more riskier, high risk, you probably gonna put it up under here. But if you want a safer stop loss, put it up under the area where they bought from, okay? So they did aggressive buying, investors started buying, and then as it came back, they filled some more investors. Not filled, basically they let some other investors get a chance to get in to go back up. So it came back and then pushed up again. Let's just keep going. This is demand. This is demand. Just letting you know. Okay, now on this one may be a little bit confusing because it didn't break no structure. But look at this candle right here. Remember, we don't move the market. So look at this candle right here. That is momentum. Okay, that is a lot of momentum. So we're looking for where did that move start from, and the move started from down here. So again, I like to do zones because we don't really know which candle to use, or so just use that area where they started from, and you see how it came right back to that area and then pushed back up. Okay, so they always have to let some more investors get back in that didn't get in at this push. Okay, this push, everybody don't get in, so they give the investors a second chance for a pullback to go back up. Okay, let's just keep going. Now this is supply right here. This one is supply. What do we see? Consecutive bearish candles. And what do? They come right back to that area to get some sellers back in to drop it again. Okay, it's very simple stuff. You have to train yourself to see these things, but after a while it's just gonna start clicking. Okay, let's just keep going. But yeah, definitely aggressive selling. Definitely. Okay, we have two back-to-back supplies. Okay, so we have aggressive selling right here, The move started from right here. Let me take out these green circles so you can see it. The move started from right here. Aggressive selling. Came back to that area. What did it do? Get more investors, more sellers back in to drop it again. Okay. Then we had another supply right here. You don't need a lot of candles for it to be supply. You can actually have 2 candles for it to be supply. Okay. So right here, the move started up here. You could do something like this, like that. But again, I like to at least cover the bullish candle and maybe some more candles. I like to do a few candles just so I can make sure that my zone get touched, because if you have it like up in here, it may not get touched. So make sure you have at least more like 2 to 3 candles that's marked up so you can get in that area, because the market is not perfect and it might not come back to your zone. Okay, so just the general area. Okay, let's keep going. Keep going. Okay, here going right here. This is supply again, aggressive selling. You see that's like 6 candles, right? How many candles is that? 1, 2, 3, 4, 5. That's 5 aggressive candles. If I marked it up, I'm marking up that entire area where all those candles are at. It comes right back into it, and then they go to break up that candle, and then you could have got in for that sale. Put your stop loss right there. That's a tight stop loss right there. You know what I'm saying? Let's just keep going. Okay, so right here. Right here go another aggressive selling. We got 2 candles. Like, that's only 2 candles. Mark that whole area up. And then as it comes back, you buy. Okay. Now again, you can, when it comes to supply or demand, you can enter 2 ways. The riskier way is to have a buy limit. Okay, to have a buy limit, like up in here, or even up in here. That's the riskier way. Or you can wait for it to break the high of candles when it comes to demand. Same for supply. You can have sell limits and buy limits. Okay, sell limits is when it triggers when the market gets to area, and it automatically gets you in the trade, and then you'll be in that sell. And the same for the buy limit. As soon as it comes to your demand zone, then it go up. Okay, so you can have buy limits and sell limits, but just know those are more riskier because you're getting in more aggressive. When you wait for the candle to break, that's more of a more safer entry. Okay, I just wanted to say that. Okay, because if you feel like you're not getting in at a better discount or a better premium price, then use sell limit or buy limit. Okay, so yeah, we have these 2 candles right here, and it pulls back to that demand area, and it should be going up after that. Okay, now let's do replay mode, because it's going to be kind of hard for you to spot demand or supply and it's small, like it's a very small one. So say right here, you see this candle, like it's only like 3 candles. If you having a hard time spotting if this is demand, go to the 1 minute, and you can see that this is aggressive buying right here. Okay, so the move started over here. Now go back to the 5. It still looked the same. So if you're having a hard time trying to spot supply and demand on a 5 minute, and you know what I'm saying, like, it's, say if it's only 2 candles, say it's only this bullish candle and then this just doji. If you're having a hard time to see if it's demand, go to the 1 minute to see how many aggressive how many bearish candles, how many bullish candles you see. Okay, so it's gonna be some times where it's gonna be hard to find supply and demand, especially with two candles, because supply and demand can be two candles. But if you're having a hard time, just go to the 1 minute, and it will show you how many bullish candles you will see, or how many bearish for supply. Okay, so let's just keep going. Here go another one. Right up in here, this little area, this is where aggressive buying happened. It paused a little bit, but then it took off, and that's where they bought it. They start buying again up in this area. So then you see how it came right back to that area, then bounced off of. Let's just keep going. Let's keep going through examples. Okay, now look at this, for instance. The move started right here. Did it ever come back to this area? Absolutely not. But it also came back to a support. So again, you have to be prepared for both. You have to be prepared for both. If it don't come back to demand, what is the next level? The next level is support. So you have to wait for both. You have to see where it's rejected from for both. That's why I said buy limits and sell limits are kind of riskier, because you're getting into aggressive. So safer way is to just wait for a candle to break its high or low. Okay, here go another one. Aggressive selling. This is supply. We have a bunch of bearish candles, black candles. Your candles might be red, and it comes back to that zone. As it comes back to that zone, we wait for candles to break. And the candle broke right here, broke right there, and you sell and have that up there. Okay, this stuff is like, you have to practice this stuff, but it's gonna become very clear the more you practice, I promise. Like, here we go again. We got aggressive selling. This is where the move started. This is where the investors started selling, right here in this area. Let me circle it right here. Oh crap, right here. That's where they started selling, and then they came back to that area again, and then they sold again. Okay, let's keep going. This stuff is, it may seem complicated at first, but I promise you, if you keep practicing and start spotting this stuff, you're gonna be good. Okay, now look at this. This is demand, but they would give you an entry? Absolutely not. It didn't break no high of candles. That's why I said buy limits and sell limits are more riskier. Your win percentage will drop if you use buy limits or sell limits, I promise. So that's just something to think about. You would get a more sniper entry, but if it don't push up, then you lose. So just want to throw it out there. You know what I'm saying? Okay, look what we have here. We have aggressive selling again. The move started right here. What did they do? They push price down to come back in, to get some more investors in, to drop it again. Okay, so yeah, that's supply and demand. Supply and demand is the market showing its hand. It's basically it's like an indication to know where the investors are making purchases and stuff. You know what I'm saying? Like, if you can see where they are selling, wait for it to come back to that area to drop. You know what I'm saying? Or when you can see that when demand is being shown, wait for it to pull back, and then wait for a candles to break, and then put your stop loss above or below the zone. You know what I'm saying? So hey, look, here go another one. Where did they start buying? Up in here. They start buying right here. What did they do? Come right back to go back up. So I want you to go back test this and see where you see constant bullish candles and constant bearish candles. Okay, supply and demand can be on the 1 hour. It can be on the 15 minute. It can be on the 5 minute. We don't really look at supply and demand on the 1 minute, only if you're having a hard time spotting it. Okay, like these two candles right here. You see how this doji and then this blue candle, if you're having a hard time, you can go to the 1 minute and see this more clear. You know what I'm saying? You see more clear. Even these two candles. You see these two candles right here? See that? That's the 1 minute. If you're having a hard time, There you go right there. But yeah, that's supply and demand. If you're having a hard time just seeing supply and demand on the 5 minute, you see how there's 2 candles, just wait and go to the 1 minute. Okay, this bullish candle and then this little bearish candle right here, that is demand right there. So again, I'm saying it one more time, you can go to the 1 minute to spot and see if that's really demand just by seeing how aggressive the buying power is. Okay, so that's all I have to say on this video, but I just wanted to make this really clear for people, because supply and demand is going to be the setups where you have the most the better risk reward. Okay, so I hope this helped you. You know what I'm saying? Supply and demand is very simple to see, but you have to know the trend that you're in, because if you're looking for supply and uptrend, you're at risk, and if you're looking for demand on a downtrend, you are at risk. Okay, so you have to understand what trend you're in before you consider supply and demand. All right.